right. Greed works.
Hello and welcome back to another episode of Let's Play Wall Street Raider. I'm RakeM, your host. And today we have a lot to get to, but let's recap what happened in the last episode. We sold off all of our holdings in Shiseido for a 318% profit. We speculated on some crude oil commodities and managed to make about $11 billion there. We had a turnaround in Millennium, so we have gone from trading at $230 a share all the way up to $709. Now our target sale price for that stock is $1,500. We may or may not reach that particular goal in this episode, but we're going to be doing some things besides just waiting around for the industry to improve. We're going to be proactive. I'll explain what that means later on. And we shorted a stock of Baidu, which went up at first but is now finally on the way down. So we have some interest rate swaps engaged in for the bank. Half of them kick in this quarter, and the other half kick in next quarter. So we anticipate a large return on those in the billions of dollars, hundreds of billions of dollars. So there's going to be a lot of decisions to be made over the next 9 months. There's going to be more activity going on as a result of those swaps and the income from those. So I don't know how many months we're going to play in this episode, but we'll try to get through as much as we can. So without further ado, let's get started. So I have the stock ticker paused right now, and we need to figure out what we're going to do with this $25 billion. And I'm going to start with the database search and just look for stocks that are underpriced and see how many or what industry has the most, because we're going to want to combine a bunch of them and see what we can do with it. So just going to scan through here and see what industries have a plethora of underpriced stocks. Global Telecommunications has quite a few. And the oil industries have quite a few, which is not surprising because the price per barrel is way down. Look at all those in Global Telecommunications. So let's look at there. Let's look at telecommunications. All right, so everybody's running out of money. And as a result, all their growth rates are low or negative, and yet the industry is growing. The demand is growing. So we can buy up a bunch of these small guys. So let's see. 4%, 7%, 9%, 11%, 13. So we can get a pretty significant share of the market here. And if we contribute some cash to them, they'll eliminate their debt and have room to grow. So let's see how big they are. All right, so 22 billion. So we wouldn't be able to start with this guy. We'd have to start a little bit smaller. Okay, so let's see, who do we want to start with? SBC. Him we could buy for 15 plus 20%, so 18. And we could contribute the other 7 billion towards his debt. How much stock of T-Mobile does he own? 100%. And T-Mobile has, come on, what in the world? Okay, Okay, so he doesn't have very much debt really. And since he's trading it under his stock or under his net worth, we'd be able to liquidate him. All right, let's look at their management. Somewhat mediocre. And SBC is also mediocre. So, where's SBC? Right here. He's only spending 4%. So if we give him some money, eliminate his dividend, and liquidate T-Mobile, which is down here, along with his dividend. Gosh, why is he doing that? And set the growth rate to 1. I mean, the interest rate's going down again, so at least I think it is, isn't it? Yeah, it's easing. So we can carry some debt, just not as much debt as he has. And then when the bank makes some money, we can have it buy some stock in the Global Telecommunications also. So let's do that. Let's buy SBC. It's been falling steadily for 14 consecutive months. Are you sure you want to buy this piece of garbage? Yes, I'm sure. We're going to turn this piece of garbage into gold. Okay, 100%. We bought it for 17.8. Okay, so that should leave us around, 7,500. So we're going to contribute to SBC cash 7,500. Okay. So before we do anything else, let's have it liquidate T-Mobile. Tax-free. Okay. And now we have 5.65% bonds, which I'm not that concerned about because the interest rate's so low, because we're paying 9.75 on our bank loan. All right, so let's pay down 7,500 of that. Okay. Now, the problem, I know I don't have any options. Okay, so the problem with SBC, come on. I'm having problems with my mouse, sorry. Okay, so the problem with SBC is right now we're negative. We're earning it at a negative rate. Okay, that's reflected here. So we can't really set this to 1 and then up this without going into significant amounts of debt, which we don't have a lot of credit left. We've only got 7,500 credit available. So one of two things has to happen. Either we need to downsize, continue to downsize, and up our R&D a little bit at a time, which really is the only option. Or we need to give them more cash, and we don't have more cash. Now, I could go into debt to give them cash, but I don't like debt. I am anti-debt. Debt gets you in trouble. So, we're going to set his growth rate to -10. And we'll liquidate some assets until such time as we have our debt under control or we have some more money to send him. We're going to eliminate our dividend, and we need to up our R&D to an amount that we can afford without going into a lot more debt, which I think would be about, we're at 4% now, so call it 9%. That'll be enough that with everybody else growing at a negative rate along with us, and the industry supply-demand situation improving, and the industry growing, or the demand growing at 11% per year our profit should climb out of the basement, get above zero, and hopefully we'll be earning some money to pay back towards our loan until we have some cash to contribute. Okay, and now let's eliminate our dividend. Okay, so let's look at this again. Alright, now we upped this by 5%, so of course this went down by 5%. And I'm not really worried about this guy growing at 28%. That's AT&T, because he's running out of credit to do that with. So and we're going to replace him as soon as we can. We're going to up this to 60% growth. What we might have our bank do once it has the money is to buy out these other companies, and we will snag a significant market share. All right, so let's look and see what else we need to do. We don't have any cash left, so we can't really buy anything else, but we have some room, about $20 billion worth of room to short something else. So I want to look in the internet service again and see if there's anything we can short. And wow, we don't want to short anything in this industry, and we might want to cover this one. Let's look at the tax basis info. He's down right now, but that industry is expanding like crazy. So let's cover this now. Because he's going to go up at this point. Okay, we gained $1 billion on it, but I don't think we could have done a whole lot better, really. If we want to short some, we've got to short this one or this one, or this one or this one, these that are super double-digit negative. But with that, this was, when we first got into this growth percentage was 6%, and now it's climbed to 23%. So this has gone from short city to not short city. All right, so let's look and see what else there is to short, because now we got even more room to short stuff. All right, so I'm looking for a negative number on this side and low numbers on this side. -7. -10. Of course, that's the one we just looked at. -6. All right, where was the -7? Cable. Okay, let's take a look at that. Yeah, it's 3%, and these guys are way overpriced. Let's look at Viacom. They're trading at their highest point. They made $4 last year, so we're looking for something less than $1, and they're going up. And they're rated to buy. Their management is very capable, but the supply-demand is worsening. So it's just a matter of time before this drops. Let's look at Time Warner Cable. Of course, it's 100% owned, so we can't short it. But his is going down. So he made $247 divided by 4, so 60 cents a share. And now he's only going to make 46. He's currently trading at 36, which is off from his peak. Right, but he's not traded, so we can't short him. But those are the best two in the industry. Yeah, I don't like the rest of them. It's either too little money or they're too apt to turn around. So let's look at what was the other one that was at -6? Auto. So let's look at him. So Nissan. These others are already pretty depressed. And they're minor factories. Let's look at, well, they're all corporate owned. Let's look at the summary. Okay, so they're corporate owned, but they're not 100% corporate owned. So he's right on pace to continue where he left off last year. Over the year, he's going to be up another 10 cents a share. If that continues, that is. So this is what this game is. It's a lot of looking and then a little action when you find the right opportunity. So you research, and then when you find a good spot, you jump all over it. Alright, so these guys have a lot of debt. And their earnings are going down. And they're trading at like 150% of their net worth. So we could short it. It's unprofitable and worsening. And they're engaged in a swap with us for which they're going to lose money. And he's worth 174 billion. So let's short him. Oh, and he's 100% owned. Of course he is. The one we want to short, we can't. Alright, any others in that industry that we want to short? Nissan, maybe? I mean, they're already depressed. But he's still got 60 billion in, in equity. We could short him and he could go down some more. He's got cash though. Why doesn't he pay down his debt? Ooh, I don't like shorting somebody that's got cash. I mean, they're very incompetent. That's a good sign, but I don't know, it's iffy. Alright, what else? Hyundai. Their earnings are going down, but they're very capable. I don't like that. What's his debt situation? It's almost a 50-50 debt situation. So if the interest rate goes up, he won't be able to make anything. He's very capable. I don't like that. All right, what else? Mazda. They're reasonably competent. They're losing money. Their debt situation is they owe more than they have equity, so that's good. And their stock price, is it above or below? It's above. So let's short him. That's probably the best one of the ones we've looked at. Now, is he owned? All right, good. We can short him. All right, now let's short him. Sell short Mazda 20%. All right, any others in that industry we want to short? No. Well, actually, him we could short. What's he got? Well, he's only got, it would be a pretty small amount. Let's not mess with it. So, and that's pretty much going to be true of the rest of these. All right, so let's look at the other industry that had a -6. All right, so that's the one we just did. We looked there and there was nothing that we could do in any of them. Internet is about to turn around, I think. So, precious metals. All right, so 0.3%. He's almost out of cash, or credit, I mean. And he's still trying to grow at 22%. These guys are right on us heels. They've got more credit, and they're earning better. So let's look at him, because he's got a huge overlay, 419%. All right, 55 cents. So he's scheduled to make $220 for next year, which is half of what he made the year before. And let's look at his debt situation. He's getting close to being out of credit. So yeah, let's short him as well. He should go down also. Okay. Let's look at our tax basis report. Now we still have room to short stuff, but let's see if there's anybody else we want to short in the mining industry. I mean, he's making 6% even though he's growing at 44%. And this guy's making 12. That'd be anybody close to 0 is who I want. This guy maybe. Tech Resources. Okay, so he's scheduled to make $1.80 a share, which is down but not negative. Look at his debt. Basically 4 to 5 ratio on debt. And he's growing at 13%. $68 stock price, off from the peak of 80. Yeah, I mean, he should go down. So let's sell him short also. All right. I don't see any others really. No other industries worth looking at to sell short. These are pretty much it. So we want SBC to turn around, and it's going to be, the first couple of quarters are going to be kind of rough. But once the bank has some cash, we'll be able to improve the outlook for both of those companies. Okay, it's time to clean up our shortcut. So let's clear this. Yes, I want to clear it, and now fill. And when you fill it, or when you hit fill, it fills it up with your the companies that you own. Okay, so I think we're ready to turn the ticker back on. And I want to see when the earnings report for SBC is supposed to come out. February 15th, so they're coming up here pretty quick. They're estimated at a negative 34. And we've done all we can do. It's got tax loss carryovers, so that should help a little bit. We lost money last year. So if we come up above zero, our stock price should go up. What's our ticker set to? 66, okay. We haven't had any cheat scenarios come up in a while. We might be able to see one of those this episode. And I see that oil is going back up at a pretty good clip too. I don't generally engage in commodity trades unless, on crude oil, unless it's below 40 or above 140. But I don't know. I think we want to wait until we have a little bit more cash or assets to deal with that, because that's kind of expensive to trade in. Gold's been pretty flat for a while. Silver, I think, is up. Yeah, it's going up. Wheat is up. It started going down, but now it's going back up. And this was around $4, and now it's... I didn't notice that it climbed. And wow, a lot of variance there. Look how steady it was, and then all of a sudden it's going nuts. What happened? Oh, we got an earnings report. So negative 44 cents. It'll be interesting to see what the next one will be, though. We had to borrow $1 billion. Okay. So negative 18. So we're climbing a little bit. And we want to put this towards our debt. There's no need to keep excess cash. Oh, here we go, cheat scenario. We are one of the 3 finalists in the competition to install a new telephone communications system in Colombia and thereby bring the country into the modern era of communications technology. Unfortunately, we're now being faced with the usual overseas problem. The Colombian Communications Ministry tell us that they favor our bid, but that we won't get the contract unless we pay them $15 million in bribes. This puts us on the spot because any such payments would violate our own country's foreign corrupt practices law, as well as the laws of Colombia. On the other hand, if we get the contract, we can expect to make about $918 million installing and operating their phone system for them in Colombia. Do we go for the bribe? Do we pay the bribe? Well, $918 million is just a drop in the bucket compared to the size of this company. We owe over $20 billion. Our company is $50 billion, so this is just too small of a number for us to bother with this. So if we say no, what'll happen is the press release will go out that we lost this contract and our stock price will go down a little bit. But we're going to recover from that fairly quickly because this amount that we lost in a contract is not that significant to our total worth. So this is one that I'm just going to refuse. And all of my apologies to Gordon Gekko, but we're not going to go for this one. Okay, and so if you look on the earnings or on the deal, SBC loses contract for phone system in Colombia. Right, so the stock price will take a temporary dip and then get back on track when the earnings report comes out. All right, and our turn ended, so the stock ticker quit. So the next thing up is the bank, and it should be huge. I mean, the stock is already up to 111. We were trading at 30 just a quarter ago. So we're going to fast forward to that earnings report. All right, so the quarter has ended as far as the fiscal quarter is concerned, and we earned $77 billion on our interest rate swaps. And the earnings report for the bank will be coming up here in just a couple of days. So you see what happened to our stock price, over $1,000 or over $1 billion. Excuse me, over $1,000 per share. So here's our earnings. We earned $11.47 per share for a total of $57 billion and change. Okay, huge. We were making 78 cents, and we went up to $1,100, $11.50 per share. All right, so let's look at the bank. We have $58 billion in a loan portfolio of $2 billion, etc. So the question is, what do we do with that money? Well, we could buy up some more business loans. We could buy some more consumer loans, mortgages, whatever. We could invest in bonds because the interest rate has jumped up pretty high. Anything above 9% is a good time to invest in bonds. We could buy additional stock. We could buy government loans, and these are the returns on the government loans. You know, there's a lot that we could do, but with the interest rate going up, oh, they're neutral. Okay, but this is pretty close to our 10% threshold, so it could easily swing 1% in either direction. So what I'm inclined to do, the next quarter is when all those short interest rate swaps take effect. So it doesn't matter if this goes up, because next quarter we're going to make money on those too. So what I'm inclined to do is, for this quarter right away, is I'm going to buy some more loans, some business loans, and specifically I want to buy business loans in the biotech industry and cut off their credit so that this industry stops deteriorating. Okay, the growth rate is 16%. Genentech, Chiron, Biogen, and IDEC Pharmaceuticals, they're all growing too fast, and I want to slow them down. So the way to do that is to buy their loan from the banks that they're doing business with. And so what I do is I select the bank and click OK. And now I'm going to buy or sell bank loans. And I select business loans from other banks. Okay, and do you want to select from the loan list? And yes, I do. And I want to sort them in alphabetical order rather than credit rating, because I know the names of the companies whose loans I want to buy. So I tell this no. And now GeneTech is going to be the first one I look at. right there. So I'm going to buy him, and I pay a premium, 3% above face value. Yes, I want to buy another loan. And let's see, what was Biogen? Oop, just passed it. So Biogen we're going to buy. Okay, Cyocorp. Looks like he must be banking with the bank that that the computer owns, because Cyocorp is owned by the computer. Let's what was the name of that other company? Chiron, right? Yeah. And so we bought him, and we bought him. So Chiron. Centercore we already have frozen. Chiron and IDEC. Okay, so let's go back to the bank. Oops. Well, I guess we'll go ahead and freeze it since we're here. All right. So Chiron. And IDEC. All right, now let's freeze them. Okay, now they can only expand as fast as they bring money in at this point. Now in the real world, if my bank froze my lending, froze my credit, even though I had a good credit rating, I would change banks. And they have that option in this game as well. But before they can do that, they have to pay off what they already owe. Okay? Now they could issue bonds and pay off their loan. They could do an IPO and expand their investor base to raise cash. So it's not like this is a foolproof fix, because they still have options. They can raise the money and pay off the loan and change banks and continue to grow at whatever rate they want. But in the short term, and we're looking to sell Millennium at like 350% of its net value. And I'm hoping that before they can raise the cash to change banks, that we'll have that stock price up to where we can sell it. Because the opportunity for us right now is in the global telecommunications industry. So I would like to get out of the biotech industry with a profit as soon as possible. All right, so let's see what STI has now. 47 billion. All right, so the next thing that it can do, let's go back to SBC. We can have it invest in one of the companies that we couldn't afford to buy. So Nippon, right? It's 25 billion to buy, or 22 billion, excuse me, but with the premium it's going to be 26, 27. We can have it buy Nippon, and then next quarter, when the bank has some additional cash, it can contribute to Nippon. So our current net worth is 58, And on banks, you can only invest half of its net worth in stocks. Okay, so we're under that at 27 million. We're just under that. So let's have it by NIPT. Okay, and these are all the rules. Okay, so we're going to buy 100%. Alright, so now we own it. And NIPT is a fully owned subsidiary of the bank. Okay, so let's make some changes here. We're going to make the same changes here that we did for SBC. So we're going to change the dividend to 0. We're going to change the growth rate to -10. And the R&D to 9. Okay. Now we can merge these two companies, but before we do, we're going to want to contribute some cash to them, and then have these companies buy up all these other ones that are good buys, like Alcatel is what this is. Not sure what company that is. This is Telecom France, and I don't know what that is. There's so many of them in the Global Telecommunications industry, it's hard to remember what they all are. But we'll have them, all these ones that are underpriced, we're going to have it buy them all up. All the ones that aren't already owned by somebody else. And then eventually we will merge them all. Okay, but right now we want the industry to slim down a little bit. And when we get our debt to where it's 25% of our, where we have a 3-to-1 ratio debt to equity, then that's when we'll start growing. All right, but first we need our management to be in good shape. And right now we are reasonably confident here, so we're already ready for that. And SBC has climbed out of somewhat mediocre to reasonably competent. So we're already good as far as that goes. We shouldn't have to increase our R&D up above 9 at all. All right. So let's turn the ticker back on. April 8th, we got Millennium earnings report due up. 907 we made. Okay, and you notice that despite the fact that we're making like $10 a share the last few months or last few quarters, last 2-3 quarters, it averages out to 406 because we didn't start making those kinds of returns until the middle of the year last year. And that's great for us because now, even though our earnings have gone down, we're beating what we did last year on average for the whole year. And that's what the game uses as the basis for whether or not our stock will go up or not, is whether we have beaten what we did for the last year on average. So next year, if we don't increase this number, or if this year this number goes down below this number, that's going to be a problem. But for right now, the fact that we're only earning $9 a share instead of 10, it's not a big deal right now. Okay, that was maybe too long of an explanation, but you get the idea. So we're scheduled to go up in earnings on the next quarter. I'd like to see if anybody has reduced their growth rate yet. And look, they did. So they've reduced their growth rate. And of course Biogen's still high. IDEC is still high. But overall it's much better. Let's see if it's improving yet. Yep, it's improving. So we could start growing a little bit faster. We're right now growing at 10%. The industry is expanding at 16%, so let's make our growth rate 18%. Because we have zero debt, and the money that we have earns interest, but it's a piddly amount. It's like 1% maybe. All right, so let's make our growth rate 20%. And it's still improving after we made that change. So our earnings should go up from this point on. And that's what buying up those loans does. It's freezing their credit so that they can't expand, improves the overall picture of the demand, supply-demand situation in the industry. But it's a short-term fix. You know, there's a limit to how much they've borrowed. And it mostly works in industries that are depressed. So it doesn't work everywhere, but it works in this situation. All right, so let's turn the stock ticker back on. The next one up is SBC and Nippon. Nippon is scheduled to be negative, so is SBC, but hopefully it'll be better than they were. Yeah, see, they're going up. We're still negative, but they're going up. So let's get to those, and I'll stop the ticker when we get there. Alright, so SBC lost 20 cents a share, which is half of what it lost last quarter. We didn't have to borrow any money though. And let's look at Nippon. Nippon lost 60 cents, which is almost half of what it lost last quarter. And it had to sell some business assets to pay down its credit line. So we're going to want to, let's look at that real quick. Yeah, see, they owe more money than they have in equity. So we're going to want the bank to contribute some cash to this company as soon as it can. And right now, it can only contribute about $1,500 because, like I said, you can only contribute you can only invest up to half of what the bank is worth in stocks. So right now, it can contribute $3,500. We can go ahead and do that. All right, and now Nippon can pay this back, or at least part of it. And that should put our equity back up above what we owe. So we just basically reverse these two numbers. But that should help out, especially with the interest rate at 10%. Right, so all right, so before we fast forward to the bank's earnings report, let's look at our tax basis info and check on our shorted stocks. So Mazda has gone down about 25%. Barrick has gone down a little bit, not a lot, about 10%. And Tech Resources has gone down about, 50%, looks like. 40%, something like that. So let's see what they're trending. Still trending downward here. Okay, he went down and now he's flat. And this is Barrick Gold Mining. Let's see what his outlook is. 35 cents. So he's going to go down some more. So he's okay to hold on to. And Tech Economic Resources. Big drop. Big drop, and wow, he's going to go from making 45 cents to losing $1.70. So he may go bankrupt. Let's see what he looks like financially. Well, he'd have to lose a lot more than that to go bankrupt. So we're good to hold on all three of these. So let's fast forward to the earnings report for the bank. The bank earned $7,716 per share for a gain of $385 billion this quarter. All right, and something to keep an eye on. Spot crude has gotten all the way up above 140. Now, it's still going up. So as soon as it shows some kind of sign of having peaked, we will definitely want to sell that short. But our value now is up to $1.5 billion almost, based on what we're earning from those swaps. SunTrust should have the cash now and the net worth to invest some more in Nippon. So what we're going to do is we're going to have it contribute to Nippon all the cash it can. And Nippon will then, at that point, buy as many stocks and pay off all their debts in that industry as possible. So let's do that right now. Financing, capital contribution, cash. The maximum is $195 billion. Okay, so we're going to contribute that. All right, and now go to Nippon. And first, we're going to pay off the loan so that we don't overbuy on stocks. Because if we try to buy something and it says we have to borrow to do it, we're not going to do it. Okay, so industry projection. We own both of these. And the first thing I'm going to have it do is buy this stock back from me so that I can go into something else. And the bank can, and then these two can merge, and the bank can take the profit off of the sale of this, the eventual sale of this company. Okay. Now, if I just contribute that stock, I will only have stock in Millennium and the bank, which is fine, but I would like a little bit extra money. And the only way to get it out without having to pay income tax is to pay capital gains tax. And if I sell it right now, I'm pretty sure it's going to be at a loss. Okay, it'll be at a loss to me, it'll be at a gain to Nippon. So that's fine. So anyway, so SBC, and are we going to buy it the shares held by RakeM? Yes, 100%. And I'm disallowed a tax loss because I own both companies, and that's fine. And now we'll liquidate SBC since it's trading at under its value. Okay, now we'll buy back these bonds and pay off the loan. Okay, now I can buy them back at this price plus 5%, or I can buy them back at this price. Obviously, I want to buy them back at that price, so I hit no. And then identify the number of shares. And somebody owns the rest of these shares, so we have to do the same thing again. But this time we're buying them back at this price plus 5%. And it's Unum Corp that owns them, so we're buying them back. No more bonds. Pay off our loan. Okay, now let's find some undervalued companies to buy. American Mobile. Okay, they're trading at 16, so we'd probably be able to buy them at 19 and change. Alright, so let's do that. We've got plenty of cash for that one. Okay, 13% is owned by someone else. So we can do one of two things. We can make a tender offer for that other 13%, or we can merge the two companies and then do a green mail. It just depends on what the cheaper option is. We already have an 8% stake, plus this is 11. But let's keep going. The next good buy are these two. He's already owned by the computer. So let's see who owns this one. Deutsche Telekom, nobody. He is being sold for 9, and we'll probably be able to pick him up for 10.5, 11. So let's buy him. All right, and at this point, I'm not that concerned about paying back our loan because it's such a small percentage of our total equity. And so if the industry starts to decline, I'll be able to boost our earnings by paying this down off of the income we make, should we not be able to grow at a decent rate. So at this point, I'm not going to be paying off any of these loans from the companies that we've merged with or liquidated. All right, so what's next? Not him. Telefónica Brazil. Okay. Well, let's see. How many is he? Okay, 100%. Good. All right. Same process. All right, and he had shares of this guy 100%, so we'll liquidate him also. Yep, he's undervalued, so we'll liquidate him also. Oh, the bondholders are blocking it. All right, let's just buy off these bonds so that we can merge. So buy back, and we want to buy back for this price. yes, we want to buy back on the open market. Price is that, so okay. And now we need to buy these back from a private holder. Alright, so this price plus 5% is going to be the price. Did I hit the wrong thing? Buy back. Yes, if you want. Okay, yes. These have changed since the last version of this game, so I'm used to just clicking right through those and not having to read any of this. Okay. That's done. Now let's see if we can liquidate this. All right. And that bond price is so low, let's go ahead and buy it back too. Because if we wait for the insurance or the interest rate to go down, this price will go up. So let's buy that back right now. Okay. That's just too good a buy to pass up on it. Alright, we were not going to play off the loan though. Alright, let's look again. Anything else that's worth buying? I'd like to buy him, but he's owned by somebody. Let's see how much. 25%. And it's 23,000 in equity, and he's got stocks. What stocks does he own? Lucent and Alcatel, which I think both of them are in network and telecom. Yeah, they're both in network and telecom. So I'm not against buying him, but I don't think I want to diversify into that industry just yet. So CenturyLink, he's highly leveraged, 15, so we'd be able to buy him for 18. That's not much of an overpay, so let's get him. All right. And we still have 50,000 to spend. That's 6.5%. That's Sprint, I think. And if we buy him, that'll put us at 21 and make us pretty close to the industry leader. So let's see how many shares of his are open. 100%. 74 billion. All right, so 37, add 20%. That's another 7 billion on top, so 44 billion. That's less than a 10% overlay. Let's buy him. So, buy stock, Sprint, yes, 100%, and liquidate him. Okay, so let's look and see where we are. We have 300 million in assets, 300 billion in assets and 227. That's about a 3-to-1 ratio, exactly what I wanted. All right, we're still growing at negative 10%. while the industry is growing at 5%, and we need to up our R&D. We are still reasonably competent, but we want to stay there, so we're going to up it to 9%. And I don't know if we have a dividend or not, but I'm going to make sure we don't. Okay, good. All right, now our earnings for the next quarter are going to be terrible. Okay, but it should go up after that. Now let's go ahead and merge with this guy too, and that'll make us the industry leader. So all right, so merge. Yes, we're going to pay that, and the minimum percent, because we own more than 51%, so the merger is guaranteed. All right, and we're going to liquidate him. Yes. All right, so our losses are huge. A lot of that is because we overpaid to buy 100% of all of these stocks. But overall, the combined company is a lot healthier, and in a month or in a quarter or two, next quarter we should probably make close to zero, and the quarter after that it should be higher. So we're going to buy these bonds back at a reduced rate. At 6.95%, that price is kind of high. Should be down in the 80s. Not sure why those are so high. So we're going to buy this, and Bank of Brazil. So we control it. If we were to sell it, would we take a loss? Yes, we would. So I guess we'll just leave it. Unless it's losing more, let's take a look. He's about to lose more money. It's because of the interest rate. Well, I don't want to hang on to him if he's going to go down. Let's just take the loss and sell him. That's just more tax loss carryover for us. So sell. All right. And all right, now let's buy back the bonds. And we're going to buy them for the 93 plus 5 points. That's cheaper than the 101%. Okay. All right, now, are we still at the 3-to-1? Almost. If I pay that back, it's going to be at 81, and that'll take us right there to the 3-to-1 ratio. Okay. So pretty much 3-to-1. And everything else looks good. Now you notice, and this is something that you'll run into, Nippon only has a 3-to-1 debt to equity ratio, but it has zero credit. And the reason why is because its bank is not big enough to extend additional credit. So when we look at Nippon, its bank is Fuji Bank. Right? Fuji Bank is too small to loan us any more money. All right? Their loan portfolio is $140 billion, and 75 of that is to us. Right? So when you get real big, you need a big bank. And right now Fuji Bank is not it. Now, when we get SunTrust situated properly, we will transfer all of our companies over to do business with it. But right now, we need another month or two, or another quarter or two before SunTrust will have enough reserve to weather any problems with those interest rate swaps. All right, so we're just going to wait another quarter or two before we deal with changing banks to SunTrust. All right, now with the stock price this high, we need to split. So we're going to stock split SunTrust. Get it down into the 200 range again. And let's just take it further, because it's going to go up every quarter from all that income. So our income per share is going to be $6.24, and we have 50 billion shares now instead of just 50 million. Okay, so let's turn the stock ticker back on, because the earnings report's only in 4 days. This time we made $521 billion, $500 billion. All right, Fuji Bank lost money, but and the reason why that came up is because I had it selected. Any company that's in this slot that has an earnings report will be displayed, even though you don't own it. Okay, so we made $7.72 a share, which is up from the prediction. Just a few seconds ago, we saw it was predicted to make $6.80 or something. So we made $386 billion after taxes. Okay, so we can invest some more in Nippon, or we can do whatever. And for right now, I'm just going to let it ride. And as far as the global telecommunications industry is concerned, I'm going to let that ride, and we're going to use this to buy some bonds, because the interest rate's pretty high now. So we go to General, Database Search, and we want to look for companies that have bonds, and we want those companies to have a value above 100,000 and less than $1 million. So there's 53, and what that does is it hides all the companies with small amounts of bonds, because we want a significant number of bonds. So this is the result, and basically I'm going to look for a high return rate. I don't care what this number is so much. And the way they get this number is, here's the bonds that they have outstanding, and this is the interest rate that those bonds are paying. And based on the interest rate, this is the price of the bond. And so if you do some fancy math and figure out what the interest rate is based on what these bonds cost, that's the number. And maybe I'll do a spreadsheet on it later, but for right now, all we care about is this is what the yield is on the bonds, right? So 12%, that's good, or close to 12%, that's good. And here's some that are above. All right, so what I want is, I want a number I want to buy a lot of bonds. So I want to buy like 40,000 and up. That's making more than 12%. And so let's just go through the list. So 12% starts here. All right, 30, 30. Here's close to 40 and it's making above, so let's buy his bonds. Okay, and now rather than go back to the database search, we can just click right here to recall the search results. So here they are. So I don't have to rerun the search, I can just click that button and up comes the list. Whatever the last results were, it comes up again. Not too many up above 40,000 bonds. So I guess we're going to go back down to 30,000. So that one has a good return. Okay. All right, that one's good. All right. General Motors. BP. All right. Well, there's none. I mean, these are the most there are. So I'm going to go ahead and buy these other ones that are up above 12%. I mean, I'd like to buy more, but there just aren't any available. All right, I think we're going to stop there. So the way you see those in the portfolio, first in the bank that comes up, so here's the stock it owns, and then below that is all the bonds. And the maximum number of corporate bonds you can own at a time are 15. And that's the same limitation with stocks. So that's part of why you want to pick the largest number of bond you want this number to be big. I mean, you want the return to be big too, but you only have 15 slots. So if you just pick the 15 that have the highest return, you may have the opportunity to make 11% on 100,000 bonds or 15% on 2,000 bonds. Well, obviously with a limited number of bonds that you can buy, from 15 different corporations, you're going to make more money off the 100,000 at 10% than you would off the 2,000 at 15. So anyway, all right, so let's look at our financial profile now. So we have $200 billion invested in bonds, 200 billion invested in stock, and we have no government bonds. Right? So let's do some buying of government bonds. You go to buy, sell, trade government bonds, and the long bond is a 20-year bond. So it started out in 2016, and it matures in 2036, which is 16 years from now. The short bond is a 10-year bond. Started out in 2016, matures in 2026. So it's only got 6 years left on it. And what happens at the end of those 6 years is whatever short bonds you have are converted to cash. Okay? And at the same time, whatever the long bond is becomes the short bond. So let's look at buying the long bond, and the current price is 96.82, which is a little high considering the interest rate, but it's below the 100 million starting price, so that's fine. Let's just buy a little bit. Okay, now let's look at the short bond. And the short bond is above. I don't want to buy the short bond when it's above, so we're going to cancel. So bonds I don't like investing in right now. I mean, the interest rate's not that high anyway. I mean, 8.83 is not that bad, but I like to invest in bonds about the same time as I invest in interest rate swaps, above 12%. And then I sell them when the interest rate's below 4%. Okay, so it's just not the best time to buy bonds right now, at least not government bonds. So we'll leave it at that. So I'm going to reserve this money to buy the loans of the companies that are in the industry with Nippon. So let's take a look at Nippon. Alright, we've sold some assets and the debt has not come down. But the industry is still improving. We could buy him, have the bank buy him, I mean. And this one. Alright, but we've been going for a while now. I think we'll stop here and come back next time. I apologize that the action is a little bit slow. We didn't play all that many months. Right now we're at October and we started in January. So, but with all this money, we got to find places to put it. So, we're going to end the part here and come back for the next episode, and we'll pick it up where we leave off. So, until next time, this is RakeM saying, have a good one.